Morning, everyone, and thank you very much for joining me. This is the Crypto Minute with myself, Russell Shawman, Senior Market Specialist at FXCM. Email address, rshore@fxcm.com, and of course, Wednesday is it's Wednesday the 15th of June, 2022. Just going to bring up a high-risk investment warning, and I'll keep this on screen. Thanks very much for those that have jumped from the one webinar to the other. And to the others that are just joining for the first webinar this morning, good morning to you. And what we'll do is take a look at our market commentaries disclaimer. And references MarketScope 2.0 and possibly TradingView. And all right, here's Bitcoin. Here's Bitcoin. It's almost a target, which kind of just makes me smile because he's blind luck. All right. So I've actually been thinking, what are we going to discuss in this webinar? Because I've had a few conversations with with clients regarding cryptos. So this is. And it got me concerned. The conversation. So we're trading at. Let's clear this off. Let's clear this off. Let's clear this off. Okay, it's trading at 25,260. So this is the question I'm going to pose to you guys: is Bitcoin high or low? Just type your answers in. Is Bitcoin high or low? Okay, at 21,000, do you think it's high or low? Anybody want to give that a crack? Kuba says it's. Okay, so it's interesting. Kuba's saying hi, Rob hi. Anna's saying perhaps further to go. Anna's saying reaching peak pain. Okay, cool. So it's interesting that you guys have said that. The guys that I've been speaking to sort of offline say it's probably low. It's probably low. It's probably a good time to get back into it. Now, I don't know one way or the other, who's right and who's wrong, right? But when somebody says that an instrument is low, I think the logical sort of question to ask is low relative to what? What are you basing that on? Low relative to what? So if you say, well, it's low relative to its peak, I would agree with you. It's low relative to its peak, right? Does that have any bearing on value? And I would argue probably not. If you say low relative to intrinsic value, I'll say, now we can talk. Now we can talk. If its intrinsic value is higher than 21,270, that's where it is now, well, then it's undervalued. Okay, but then I'm going to ask you, what's its intrinsic value? Now, if you say, well, its peak was its intrinsic value, I'm going to ask you, how do you get that? What's your calculation in that? Okay, so if somebody says to me it's low, I'm going to ask you low relative to what? Okay, so because if 21,000 is low now. And let's just say, remember, it's so I had two targets here. And again, I'm going to just say, take this with a grain of salt. I'm enjoying putting in the targets when they get hit. I don't enjoy trying to put in targets when they don't get hit, right? So here's it's a technical. This is a technical pattern called a rising wedge. All right, so we're pretty close. All right, so that's the first target. Okay. Well, I could say, well, it's low. It's 21,000. 21,000 is high relative to my second target. Well, what's my second target? Well, my second target is based on head and shoulders. Okay, here's the left shoulder, here's the head, here's the right shoulder. I put in my measured move. Hey, now we're getting to something that's serious. Okay, now we're getting to that 15,000 we spoke about last week. So again, low relative to what? Now the reason that I asked that question is because, okay, it's I think a statement that's very much based on a psychology that traders have. We all have it, and that is that when we decide that something has value, when we decide, and I'm including all of us, right? When we decide that something has value, and it works out differently, the market, and Ben Graham calls this Mr. Market, decides, well, no, you're wrong. It's very hard for us to assimilate that reality into our trading psychology. Whoever bought Bitcoin at 70,000, it's clearly wrong in hindsight, right? It's clear they're clearly wrong. The problem is how many of them recognize that they're wrong. Okay, how many of them recognize that they're wrong? And I would suggest there's a lot out there that recognize that they are wrong, and I would suggest that a lot of them don't recognize that they were wrong. What they're doing is they're fighting Mr. Market. Okay, it's a fight that you'll never win, by the way. Mr. Market will always win. Okay, always. The market's going to do what the market's going to do, despite what any of us want it to do. At the moment, right now, Bitcoin is getting absolutely hammered. There is no store of wealth in Bitcoin at all. Okay, and you can't argue otherwise. It's clear that wealth has been destroyed here. Value has been completely destroyed. Okay, so the idea of Bitcoin being a store of wealth, that doesn't hold water at the moment. So again, what is the intrinsic value of Bitcoin, and how do you get it? Now, let's assume that there is an intrinsic value. Okay, let's assume that Bitcoin has an intrinsic value. So, well, that's okay. All right, Bitcoin has an intrinsic value. That intrinsic value is not an intrinsic value in isolation. We know that, we've discussed this. That intrinsic value is measured to the intrinsic value of the US dollar. Okay, that's what you are effectively measuring against. Now, if the Bitcoin doesn't have intrinsic value, well, then the whole Bitcoin US dollar pairing is relying on the US dollar. Okay, but if Bitcoin does have the US dollar, well, then it's a relative analysis. Then it's a relative analysis. Okay, and if it's a relative analysis, okay, the US dollar is a freight train. Okay, it's an unstoppable freight train. Okay, the US dollar. So if the US dollar is an unstoppable freight train, that brings us through to our relative analysis here. I want to show you something very interesting. Okay, I'm going to apologize to ARK Investments the ARC Innovation ETF, because we're going to look at the ARC Innovation ETF. All right, let's bring that up. All right, let's get rid of that. Let's get rid of that. All right, here's ARC. Put it on logarithmic. Okay, so this is ARC, and you can see that the value here has been. This has also been sort of the value here has been destroyed. Okay, so now we need to understand sort of how does this relate to our Bitcoin discussion. And to me, it relates purely in terms of psychology. I think the psychology of crypto bulls is very much encapsulated in the ARC Innovation Fund. I think that you would have to search far and wide to find a Bitcoin bull that is not sort of watching the ARC Innovation ETF sort of story unfold. So if you listen to the comments by Kathy Wood, she is so I haven't been watching. I mean, I do know MicroStrategy. I would say they're the same. For me, the ARC Innovation Fund is kind of where I've been putting my focus, and we'll come back to MicroStrategy in a moment. But yes, again, so I think that would be very much similar to this. So look, here's the turning point. Here's the turning point of ARC Innovation on the 1st of Feb, okay, because we're looking at a monthly chart. So let's do this. Let's take a look at this in stages. I'm losing my thought. I beg your pardon. All right. So if you've been listening to Kathy Wood, she's making an argument that there are deflationary forces. She's making an argument that there's deflationary forces. So I've been thinking about this. Obviously, you can't just sort of dismiss it, because is there something to her argument that there is deflationary forces? And there probably is, by the way. There probably is. Let's try and so one of the things that she said is that the number of credit default swaps. One of the things she said. There's just sort of an explosion of credit default swaps. Okay, that's kind of something that she tweeted. Okay, fine. Let's say that there is an explosion of credit default swaps, and I think that there are. Is that deflation? Is that deflation? Because she's saying that's a deflationary sign. So what is a credit default swap? A credit default swap is effectively, it's an insurance policy. That's the best way to think about it. You taking out a credit default swap effectively to insure against a credit event. Now, the best way to explain this is actually to go back all the way to the global financial crisis. You go back to 2008, and I think it was Goldman Sachs that was doing this, but subject to correction. I can't. So what this bank was doing, I think it was Goldman, is that they were selling credit, collateral debt obligations, collateral debt CDOs, collateral debt obligations. Effectively, what is a collateral debt? They were packaging subprime into a securitized instrument that was called a CDO, and they were selling that. Now, in hindsight, again, we all know that what happened. The subprime was worth nothing, right? But at the same time that they were selling that, they were buying credit default swaps. They were insuring against the credit event of the CDO. In other words, they were anticipating a credit event, but if the credit event happened, they were safeguarded because they were. Now, who were they buying the credit default swaps from? They're buying it from ARG. Okay, ARG insures everything. Okay, there was so much insurance taken out on the CDOs that if the credit event happened, and we all know it happened, ARG was going to go belly up in paying out the insurance because they just weren't, I guess, diversified against such a huge. But that's effectively what happened, and then we had like bailouts, etc., etc., etc. All right. So let's just say there is now an explosion of CDSs, because the last time that happened, it did lead to a deflationary event. We went into, so from the global financial crisis, we went into deflation. But hang on, we're making a big leap here. Okay, we're making a huge leap and a massive assumptions. Okay, what we're doing is we are making what's called making a few kind of. So number one, we're data mining. Number two, what we're doing is we are being time series biased. In other words, we kind of saying that the current environment is exactly the same as the previous environment, and it might be. But the point is, well, before we get to that deflationary scenario, a few things have to happen. So you can't just jump because CDSs are growing that we're going into deflation. Yeah, we might, but we might not. Like the second thing, of course, is well, let's just say we do go into a deflation environment. Let's say that does happen. How's that going to help your fund? How's it going to help ARC Innovation? Deflation means that asset prices are declining. That's what deflation is. Okay, so if asset prices are declining, why are yours going to appreciate? So you've got to make that argument. You might be right, but just because it's deflationary, what makes your fund counter that? You understand? So so what am I saying here? I'm saying that Kelly Wood's making a lot of statements to justify ARC Innovation, and she has to because she's the CEO. She's making those justifications, and I think that's what a lot of crypto investors are doing. I think they're making a lot of justifications for crypto. What we do know about ARC Innovation is that it's been absolutely hammered since its peak. It's down 76%. I did the calculation earlier. Cryptos are the same. There's been absolutely a mass amount of capital losses. So, okay, if the statements are questionable from ARC, okay, why wouldn't the statements about crypto be questionable? I think by the way, they can prove to be correct. The statements can prove to be correct, but that is yet unproven. Okay, that is. I remember writing an article on Ethereum 2 years ago on Ethereum 2. I'm still waiting, for what was it? Going from proof of concept to proof of I can't even remember. It hasn't happened yet. It's still being tested. So and it was like imminent. Like Ethereum 2 was imminent when they wrote the article. I'm still waiting. Now the key here is we've got Anna says, what about MicroStrategy? So MicroStrategy, I never even heard about MicroStrategy till a couple of weeks ago. They've just gone heavy Bitcoin bulls. They've loaded up on Bitcoin, as far as I can tell, to the point that if it dips below 21,000, they're going to be margin called. Okay, so so let's just say that is what's going to happen. Well, that's just another kind of indictment on a whole lot of really just crazy stories. So you've had terror, and then you've had excuses for terror. Then you've had Celsius, and then you've had Coinbase laying off staff. I mean, it's just one thing after the other, and then the Bitcoin bull saying, well, this is why they're laying off. This is why Celsius is doing this. This is, well, the point is, well, what's this inflection point on the 1st of February? Okay, what's this inflection point? Surely there's clearly something that's happened. This is a parabola. Okay, we've got a parabola here. So what's this turning point here, and why have we got this sort of parabola? Well, the reason we've got this parabola, I don't think any of us need to be geniuses to understand. This is lockdown. Okay, this is the parabola. This is lockdown. Okay, so the biggest holding of ARK is Zoom. Well, Zoom became indispensable going into lockdown. That's her biggest holding in ARK. But it's kind of, we're going to go. As I'm speaking with you guys now, I'm speaking in my office at home, but I'll probably be back in the office full time, I suspect, September. And I mean, I go in every once in a while. I was there yesterday, but we'll probably be back full. So the point is, this parabola that we're seeing, this is an abnormal environment. This is an abnormal environment. Still doesn't answer. What's this inflection point? Why is the turning point of this parabola on the 1st of February? So I'm going to give you my answer, which again is subject to correction. Okay, but I'm pretty sure I'm spot on here. But it's subject to correction. I'll ask you guys, what's the inflection point? What's the inflection point? What do you guys think? Let me just take a look here. Anna's got a ton of good stuff. All right, she's got a YouTube video here. I'm going to just post this on for you guys. So I haven't watched this, but thank you very much, Anna. So I'll just post this. You guys can take a look at it. All right, cool. All right, so anybody want to have a bash, have a go? What's this inflection point here on the 1st of February? What's this inflection point? All right, I'll give you guys a clue. It's a freight trade. Okay, what do you think this inflection point is? Okay, let's put it in. How's that? It lines up perfectly with the bottom of the US dollar. Okay, we've got a parabola to the upside. Guess what? We've got a parabola to the downside as well. Okay. So so this is the issue here. If the dollar starts underperforming, I reckon ARK Innovation probably a great investment. But that's not where we are right now. Dollars are a runaway freight train. Okay, so this is kind of the story. Now Bitcoin, okay, has the dollar as its counter. Bitcoin has its dollar. So I said right at the beginning, let's assume Bitcoin has an intrinsic value. Let's assume, okay. Well, I think that a few of the holdings within the ARK Innovation Fund would probably have intrinsic value as well. Zoom, I would suspect, has some sort of intrinsic value. Dollar's a runaway freight train at the moment. Okay. What's going to be interesting is, and Rob asked us to do this yesterday. I've got to think about how we're going to approach it, because I have absolutely no idea. And again, nobody knows how is the quantitative tightening going to affect. But let's now split this. Let's split this parabola in half. Okay. Well, what happened over here? What happened over here? Okay. Well, that was the start of QE. Okay. Then we got the bottom. The fact of the matter is there seems to be some sort of forward discounting here, but it was really the QE that started this parabola off. Okay, now as we start tightening, okay, as the interest rates start moving, okay, let's actually throw in some interest rates here as well. Let's see what's happening here. I haven't actually considered that. Let's throw in some. Let's throw in the US 10-year. All right. So the US 10-year actually bottoms before, but it's really, so it's really the US dollar. Let's do, when does ARC really start breaking down? It really starts breaking down on our third vertical line here. Well, that's really when the US 10-year starts taking off. Okay, so when it jumps from 1.5% and now we're at 3.4%, that's really when the ARC innovation comes down. So you can see greenback combined with interest rates here, I think are going to be very much the key on ARC innovation. And between US dollar and the 10-year, maybe Kathy Wood's deflationary argument sort of fits in neatly there. I've got to think about it a bit more, you know. But I think she's missing out a middle part in that argument. She's making like a big assumption. Why would it be deflationary and not disinflationary? And if it's disinflationary, is that the same thing as deflationary? So I'm not sure. I'm not sure I kind of buy the argument, but admittedly, I haven't really thought it through. So that's kind of what we're dealing with at the moment. Now, if you guys were on the first webinar, you saw the difference between the Fed and the Bank of England. So it's not only in innovation that we're seeing the stock a reality. The reality is in the Forex market as well, whereas you see the cable pairing, pound devaluing relative to the US dollar. So the dollar is really influential in multi. The US dollar is the first link in a chain of causality. Now, once we get the dollar top, and I don't know where that is. Nobody knows where that is. Okay. Once we get that, yeah, then I think maybe innovation. Then we can start talking innovation. Now, one more addition to this analysis, okay, which I think is going to be fascinating going forward. All right, is the COPOC indicator. All right, so there's no doubt that ARC innovation has hit the value proportions. Okay, so I think to be fair to the fund, there probably is some sort of value within it, but we would need to see the COPOC indicator turn up. Okay, so I think that the pain here, you know, there's still a probability of further pain in the fund. Until we get the COPOC indicator actually turning up, then I think it probably reaches value, and then it's probably worthwhile listening to this deflation type of argument. Then it's worthwhile seeing how does that deflation argument fit in with the 10-year yield? How does the dollar fitting in? Because clearly the inflection point there is plain to see. So we want to keep an eye on that. Okay, so we want to keep an eye. So now, if the ARC fund carries on going down, then the COPOC indicator carries on going down. And I guess that's where we'll leave it at. Any questions? My point is, you know, when somebody says this is low relative to what? Low relative to what? And if you can give me an answer, we can have a discussion. All right. I don't see any questions. All right. I think then, and it says Bitcoin simple, interest rates up, dollar up, Bitcoin down. Yeah, I think that probably sums up the hypothesis. Rob says he was looking at the FANG index. It has a similar COPOC. Yeah, we can just throw that in actually. All right, perhaps let me just see if I can get. Yeah, that's better. More history. I've got to be Rob. I've got to give this some thought. So I'm not sure if FANG does have. See, we're looking at COPOC under 0. So on this, the big uns, it's not quite there. On the FXCM measure, it's perhaps there. What we can do, Rob, is let's bring in just the NASDAQ. Let's just take a look at plain old NASDAQ, NDX, right? Which I looked at yesterday, and it's close. It's close to reaching 0, but it's not quite there yet. Okay, so I think that we're kind of getting to the. I think we're getting to that critical level of 0, but we're not there yet. Again, I want to make a big point here in that the fact that it hasn't reached 0 doesn't mean that it hasn't bottomed. It can still go up. It can still go up, right? But I've always looked at the COPOC curve, and those signals from when it's under 0 are really, really good signals most of the time. I mean, we have seen instances where it has flashed a whipsaw signal, but generally they've been spot on. So I think that the risk market has a little bit more pain to come. There is, you know, if you listen to Bloomberg, they're talking about that capitulation. If we go back to the Dow theory, it's called that panic selling. Maybe there's a little bit more of that to come. I think that it's going to be very much a function, Rob, of what comes out of the Fed tonight. I think what comes out either provides some sort of support. We see that perhaps a bounce if it's less hawkish than expected, more hawkish than expected. Maybe we get that panic setting. Maybe we get to that 0 level and below. Then, you know, things become really interesting. And Rob's just saying, with ARC, we would need a factoring that it's an actively traded account and that the composition changes. Yes, I think so. Let me give that some thought. I would suggest that's correct. The COPOC indicator is generally designed. It was generally designed to be used on an index. So in that regard, the index, although index constituents would also change, the changes in an index would certainly not be as active as in the ARC Innovation Fund. So I would suggest, Rob, that you are correct there. All right. I think let's wrap up here. Tomorrow's a public holiday. Here, so I will speak to you guys on Friday. Thanks, guys. Cheers.